I think if you look at the trend for Sukuk over the last 5 years, it's been really being driven by a demand which was born out of the credit crisis in 2008, when there was a retraction from the US and the European banks from this region. And the corporates and issuers had to seek to tap different sources of funding. And I think that gap's largely been filled by the Sukuk market. There's obviously been a number of other things, such as regional events, such as the Qatar World Cup and the Dubai Expo 2020, which means that there's a lot of large infrastructure projects that will need to be financed. And financing those simply on a bond syndicated basis is not going to be sufficient. So we have to try and tap the Sukuk market for those. On top of that, there's also been regulatory requirements. Basel III has been one of the big factors which has caused all of the banks, regionally and globally, of course, to reassess their capital requirements and to take on different forms of subordinated debt. And again, that's come through a lot of the Sukuk that we've been doing recently for the banks, is to have Tier 1, Tier 2 Sukuks. On top of that, there's just the general corporate needs of a lot of our clients in the corporate sector, to try and diversify their sources of funding for various reasons. I mean, obviously markets tend to be cyclical, and the better placed you are to be able to attack the bond and Sukuk markets when the loan markets have been dried up, but there's less liquidity in those markets. It's just sensible for your balance sheet to be able to do that. I think if you're looking at a choice between conventional and Sukuk, one of the main issues will be the investor base. You will be able to tap a much larger investor base by going to the Sukuk market. Conventional will always be open only to the conventional market, whereas the Islamic investors can only invest in something that's Sharia compliant. So what we've seen is a lot of the conventional investors have now got very used to Sharia products, so they can actually come in and invest just as easily into an Islamic product. But the Islamic investors can always only invest in something that is Sharia compliant. So the demand and the investor base is a lot higher for something that can be structured on an Islamic basis. I think traditionally also there was larger differential between pricing on a conventional and a Sukuk. And certainly regionally, there's been a narrowing of that. In some cases actually, certainly in Saudi Arabia, you can actually get cheaper pricing on a Sukuk than if you were doing a conventional, because again, the investor base there, the treasuries of the banks, the government to invest in these, want to see an Islamic product. So I think that's made it a lot easier for issuers to choose between conventional and Sukuk products. And as we were discussing on our panel today, I think there's also, from a legal perspective, there has been a standardization more over the last few years of documentation, which means issuers have more certainty as to the cost and timing for actually doing a Sukuk. 10 years ago, if somebody wanted to do a Sukuk, they wouldn't know how long it would take them, how long it would take them to go through a Sharia board to get the approvals, and ultimately how much that would cost them in fees, legal or otherwise. Now they know that there's far more certainty around that. They can make a more informed decision as to why they want to go conventional and Sukuk. So I think there's still very good reasons why people do go conventional. I think if you're looking to tap the more international market, certainly if you're going to the US 144A, then generally we tend to see those done as bonds rather than Sukuk. There have been one or two Sukuk issuances done on that basis, but trying to appeal to that investor base where they're very comfortable with bonds, trying to explain the structure of a Sukuk to them can take a little bit more time. I think this event, year on year, it's just grown. 2-3 years ago, this was attended by a few hundred people. Now we're over 1,000 people. And I think that's the maturity of the Sukuk market. It brings together both issuers and arrangers and other participants in the market like ourselves as legal advisors and rating agencies, the accountants, essentially all of the players who are needed to make a Sukuk in one place. And it's a great sounding board for people to be able to discuss the future and development of Sukuk. I think the global trend for Sukuk is increasing. There have been some headwinds recently, obviously with oil prices going down, the possibility of interest rates rising coming out of the US. So I think the market has been a little slower this year. but the general message is that it's still a robust market and it's going to be growing.